Hello, everyone, and welcome to another episode of Coffee with Carl. I'm your host, Carl Zoellner. I'm one of the attorneys here with Anderson Business Advisors. In today's subject, we're going to talk about deed of trust or mortgage, some of the basic differences, as well as some of the, things you should know about them. So, starting out, let's talk about what they are at their most basic. Both a deed of trust and a mortgage function as a lien against the title of the property or as a security interest that is usually tied to some sort of loan. So if I have a loan or am I lending money on a project or on a property, what I'm doing is, depending on the state, I'm filing either a deed of trust or mortgage against the property. So I'm taking that collateral of the actual property, so I make sure I get paid out on sale. So easiest way to visualize this would be if you own a personal residence, is when you bought your personal residence. If you borrowed money from a bank for the loan, they usually put a mortgage, they use the same tools, deed of trust or mortgage, against the property so that they have an interest in it. If you sell it, they get paid. So same idea you would use if you, say, are lending on real estate. So the real major difference between a deed of trust or a mortgage from a functional standpoint is a deed of trust has three parties to it. The lender, the borrower, as well as a trustee. Normally that trustee can be a bank or a title company. And the mortgage is usually just between a lender and borrower. Another distinction or another thing to note here between deed of trust or mortgage is some states allow for mortgages, some only allow for mortgages, and some only allow for deed of trust. And then there's a couple that are okay with both. In my experience, if it's basically filed or formatted correctly, the county recorder will generally record it. But when you go to a title company to record this lien against the property, usually that title company will put you in the right category of what you need or any requirements there. So the big difference, like I said, really that there's a third party to a deed of trust. There's only two on a mortgage. So that is your most basic sort of piece of this puzzle. Like I mentioned, realistically, if you're going to be lending on a property, you're going to want one of these, depending on the state, filed against the property, though, so you have what's referred to as a secured note, and this is the security portion of that note. Another item to consider, or at least discuss, is that when you file one of these on a property, normally when the property goes to sale, the title company will see that note on title and pay it out. So that's another reason as well. We want there to be that note on title. For the main reason would be that if it's not, or that loan is not secured and the buyer has no notice of that lien on the property, then if they purchased the property, they would purchase that property free of that lien. So we want that note on there to make sure you get paid at the end of the day. So this is really important, like I said, for our lenders out there, as well as our developer or property developers or somebody taking on loans, so that you know what the appropriate process is. The other thing to note with these is sometimes if you have a hard money lender on a property, they may not want to have this second lien. So then you would need to work on another scenario with your lender or the person lending on the project to make sure they're comfortable with the business proposal as well. Lots of ways to do your real estate transaction. Doesn't have to be sort of the loan and lien scenario as we're talking about here, but it bears to mention, just because we do get a lot of questions on it. What is a deed of trust? How do I set one up? Or my state's a mortgage state. How do I do that? So just like I said, from a real basic understanding, it is just a lien on the property, whether it's a deed of trust or mortgage. It's really about facilitating it in the correct way. So we're happy to give you a little information on that side. So as always, please take advantage of all of our free content out there. Also, if we've got several online classes coming up as well, so we'd encourage you to join us for those. And in the meantime, if you're a Platinum client, feel free to always reach out to us. We're happy to chat with you. And if you're not yet a client, we want you to get that free consultation so you can at least see what Anderson would suggest when we're looking at your business entity structure and tax planning strategies. So, till next time, thank you for joining me for this episode of Coffee with Carl, and we will catch you on the next one. Thanks.